All right, traders, George here, and time for a look at oil. Got a lot of emails and questions about oil moving down so much. How is oil able to move down so much? And the answer is the same for anything that moves a lot. And that's simply that the buyers or the sellers overwhelm the supply of price at that particular point in time through that particular price range. The tendency for people is to always assign some sort of a story to why price is moving. But that's the reason why price moves. If there was an unending supply of price at any particular price point, then it wouldn't move no matter what. But that's not the way it is. Price availability changes through time, and that's what allows price to move. In terms of how far it moves and where it moves, it happens to correlate highly to where traders have done their trading in the past. There are a couple different ways that we can look at those levels. One of the most important ways is with the balance beams, which are these horizontal spikes. For this particular chart here, from the low 90s up to the low 100s constitutes the most intense traded zone on this monthly chart look back, i.e. every candle is a month. And the areas below the low 90s start to lessen in terms of their trading commitment. There's still some key areas on the way down, but those trading commitments diminish. And that means if you break below that floor support, it's easy for price to move through. And you can see that the size of the candles getting back down through about 104s, then driving to about 92s and 91s, those candle sizes were pretty pedestrian compared to what it's done in the past. It wasn't until we got below the low 90s that it really opened up, and you can see this monthly candle here, the most dominant candle that we've seen in quite a while. The last video that I did, we were at 78.39s looking for the final push down to the low 73s. I had 73.04 tagged as the area to watch, but really staying above this balance beam spike here is the reason why it is where it is. The 50% retrace here comes in at 73.97s, so really anywhere between those two price points would be a key area to watch on the way down. You know, we're talking about a monthly chart here. Here's what oil's done since that last video of just a couple weeks ago. So here we are Sunday Globex, and we've gotten up to 75, 72s after getting down to 73.25s. So we got almost all the way down to the round number of 73. This is what that daily chart now looks like as opposed to a monthly. This is going back 700 days. You can see there's a lot of trading commitment here that ends at about 92, really opens up down to about 87s. Below 87s, it really drops off. See you later as we break below, going into the 82s, then into the 78s. We're currently below 78 right now, and that is something to look to for key overhead resistance. If we happen to pop up that high, it would be an area to watch for some new bull energy to come in to take us up another $4 or so to 82. But here's a more refined look at what the traders have just done recently here, and this is a really important trade range view here of oil. So I'm just going back 30 days now to show you where all the trading commitment is on the sell-off. I mean, there's obviously some folks here that are going long oil under different circumstances, but there's definitely some selling going on, some short selling, and actually some vacating of long positions as well. Just a mix of everything is what's making all of this happen. But you can see here that about 82.50, this top line here, at about 81.50, these are two heavy traded zones that we broke below and tested as resistance. We came down to this level here, put in a lot of trading in the mid 77s. We tried to make that support, didn't hold. We broke below that, checked that as resistance on the way down, pushing off the floor, and then we got down to 73/4 for the low, and we know from that monthly chart where that is, and it's basically edge of the cliff, about another 30 cents lower than that, and it's basically going to $70. Big short covering here, some new longs coming into the mix. We crossed over 75.30s. We're at 75.63s right now, down to 60 Sunday Globex here, and this is an area to watch now. We just looked at gold and silver for bounce information and areas of strength. You can see here that this is a lot weaker looking than gold. And you know, the real thing that hits you over the head here is the trading commitment is just really shy the lower you go here. So even though we had an intense bounce here, there's not a lot of trading commitment going back 30 days at this region here at all. We have gotten over 75.30, but watch for a break below 75.30 to send this thing down fast. All right, so below 75.30s could see an accelerated sell, and the retest of 73/4 would be the first order of business there. Maybe a nod to this zone here, about 74.50s or so. At 75.60, we're staying over 75.30s, and there is a bit of an air pocket there. The main goal would be to get up into the mid 77s here. So I've got 76.76 as the floor zone here. 77.36 is the spike, and 77.80 is the ceiling. This is real intense overhead resistance here, and that's why I've committed 2 of these target labels to this area here alone. Over 77.80s, 78.65s sees this area. Air pocket takes us up to the low 81s. Obviously there's some overhead resistance moving up to that level starting at about 80. But you can see how weak oil is here, even though dramatic the move up off the low here in terms of how many dollars that is. But in terms of where the trading commitment is, it's pretty dodgy. If we start trading below 73/4, I've got a couple of recalculated downside targets here: 70.61, 69.21, and 67.36. All of those would be areas to watch for a support swing to come in, potential bounce, outside return, passage through that zone again would likely see the next target. So oil is pretty precarious here, even though the bounce is real strong from the low 73s. The problem with oil is there's just not a lot of trading commitment at the 73, 74, and $75 range here, so there's not a lot for it to hang on to. Therefore, breaks below 75.30 extremely bearish here for oil. Watch for any trips up to the low 77s as a chance to see a key resistance swing that would send it back down as well. Anything over this level here would be sort of a reset of the clock and of the position here, which would start to give the bulls a little bit more to work with. We'll keep on top of this in the live room, but these are the key tradable ranges right now, and these are new hot zones below, calculated based on breaks to 73/4. That will do it for your oil update, and we will see you back in the live room.